Hi, my name's Jason Selig. I'm here at Loop & Gross Barnett, a firm of accountants in Manchester. It's just a quick video to update you on the changes or the beneficial regimes regarding national insurance contributions, and in particular employees' national insurance contributions. As most people will be aware, there are two levels of national insurance contributions, one at the employee level, which is about 12%, and the other one is employers' national insurance contributions, which are nearly 14%. During the recent election 2 or 3 years ago, there was a concern at governmental level that these kind of contributions were causing a problem in generating employment, and therefore the government thought that employers were being put off hiring people because of the costs involved. So government have raised two regimes, one that's been around for a few years now, and a second one that's coming in from April 2014. Effectively, both are aimed at employers' national insurance contributions. There is no current regimes for relieving employees' contributions. The first regime that was put in place with effect from September 2010 is a regional employers' national insurance scheme. This has been aimed at certain regions in the country, basically excluding the South East and London, and the relief works by removing the liability to employers' national insurance contributions by £5,000 for up to 10 employees of a new business. So effectively it's worth approximately £50,000 to a new business that's been set up, so there's all kind of qualifying conditions for that. It can't be a business that was working and then has been resuscitated, or a business that's been carved out of another business, and it is a holiday, if you like, or a reduction in that liability for the first 12 months that that business has been in operation. When the scheme has been around since September 2010, it is coming to an end in September 2013. There is a lot of paperwork involved in claiming back the national insurance contributions made by the employer, and there are all kinds of regulations. For instance, it is only the first 10 new employees of that business. So for instance, if you set up a pub and you have temporary staff that you're using whilst you get things up and running, they will count towards those 10 people, and you might have only paid them 500 quid for a few shifts until you've got onto your feet, but they would effectively be one of those first 10 new employees as part of the rules. So the government have found that there hasn't been a great deal of take-up on that scheme, and it hasn't effectively boosted employment to the extent that it would like. Accordingly, they have now started a second initiative. This has come out quite recently regarding an employer's national insurance allowance, and this the regulations and the rules for this are a bit up in the air at the moment. They are coming out after the Finance Act has been signed off, and over the next 6 to 9 months the rules will become apparent after consultation with various employers' representative bodies. But in essence, it will allow any business a deduction of approximately £2,000 of national insurance contributions for employers, and that will be taken off that employer's liability. So accordingly, it will essentially allow a business to employ one member of staff at a salary of approximately £22,500 without a national insurance charge. Or alternatively, it will allow somebody to employ 4 full-time members of staff on a national minimum wage. So you can see where the government is going with that. It's trying to encourage businesses to increase the amount of people that they employ. It will apply, as I say, from April 2014, so that there is a bit of a way to go yet. But effectively, just from a tax planning point of view, a lot of commentators have said that it will also apply to, say, businesses which have only got one director or a couple of directors that are owner-managers that are currently paying themselves £7,600 odd to keep below the threshold of national insurance, which they can receive without any tax because it will be covered by their income tax personal allowance, but will produce a corporate tax deduction without any other charge. So that works quite nicely what the commentators are saying is, due to this actual deduction of employers' national insurance contributions, it could be that in the round that salary of 7,600 odd will actually be pushed up by those companies to allow them to take advantage of the deduction for employers' national insurance contributions and maximising the relief in the company itself. Of course, there is a offset arrangement against that. There is a cost of paying yourself additional salary because the director or the owner-manager employee will suffer national insurance contributions in their own hands, the employee's national insurance contributions, and there might also be an effect on the tax credits that they are receiving. But overall, it is expected that that level of salary will be pushed up in order to take advantage of that national insurance deduction.